Good evening to all. On behalf of Sendax Clinic, I welcome you all for this webinar. The webinar topic today, as you will be aware of the fact, job work under GST. This is a very, very important topic for the people in and around Coimbatore and also in other cities where the manufacturing operations are taking place. So that only we thought, let us discuss about this topic, which has got a very, very practical relevance for the industry as a whole. So this is a topic which will be used by the department in future to extract the tax from us. Now the department is not concentrating on this area very much, but in future this is going to be the very, very important area, because now the department is concentrating on collecting tax between the ITC claimed in GST 3B and then what is populated in 2B. So these differences, then what is the amount that you are given in GST 1 versus 3B, all those relationship are taking place, and then on that basis the tax demands are raised. You will be aware of the fact. Now there are so many notices have come demanding the tax on these areas. So there is no tax demand on the area of the job work. But in future, this is going to be a gray area for the trade and industry as a whole. So we thought, let us bring it to the knowledge of the total trade and industry, the implication or the precautions that should be taken by the trade and industry with regard to the job work as such. In every webinar or wherever I go or we go for a presentation, we put this slide in the first. The meaning is katrathu kaimannalavu kalladadu ulagalavu. So what is this is the wordings of the Tamil poet Avvaiyar's words. So what we have learned is to the sand that can be filled in our hand, but what we have not learned is the size of the whole earth. So that is how she has interpreted what we know. But in the changing scenario, what we so in the changing scenario, what you have learned is very, very less. So with this, let us go into the topic. Job work. See, job works are mainly done by MSME units. Job works are mainly done by MSME units. This is a work done for big units. See, the job works are done by the MSME units for big units, but this is mutually beneficial. This is mutually beneficial for the big units and also for the MSME units. So what are the benefit for the MSME unit? In case of a job work, the material is supplied by a big unit or big corporates or a large scale units. They sell the materials to the MSME units to do some processing on the material supplied by them. So that is job work. So in this situation, if the MSME units had to buy the materials, then process it and then give it to the large corporates, then it has to buy the raw material on its own, and also then it has to process the same. Then it has to supply to the big companies. Then they have to collecting time. So for all this time, there is a huge working capital requirement in the form of materials in various stages. So whenever the materials is supplied by the other big companies to the MSME units, there is no locking up of the working capital for the MSME units. So in this angle, it is a very, very useful operation and then required for the MSME units. So there is no need for a big investment other than investment in the plant and machinery. Other than investment in plant and machinery, MSME unit does not require the working capital. So that itself is a great relief for the MSME units that is engaged in the job work operations. So the same way, what are the benefits accruing to the big units that are giving the goods on job work. One of the important is, see, they need not invest in machinery. Though the job worker or the units that are carrying out the job work is engaged in a job work operation, they too have to invest in machineries. It may be in the form of a CNC lathe, all the other things they have to invest. So now the CNC lathe, single lathe may be costing crores or something like that. So to that extent, the big units, they need not invest in that machineries. That is, and also there are so many MSME units. So big unit, big corporate, if they are going to invest in a, say their requirement is to the extent of 50 machines, instead of investing in 50 machines, they can give it to the nearly 25% MSME units who are having 2 units each, 2 machinery each. So there is a capital intensive or capital requirement of this big corporate gets reduced whenever they go in for a job work. And another important aspect that we have to see is the labor force. Now, getting a skilled labor force is a Herculean task. Everyone knows. So we want a worker for that, we don't get it. Now there is a saying, always go for the North Indian workers in each and every operations. So in such a situation, these big corporates, instead of recruiting their own force, whenever they send the goods for job work, there is a lesser requirement of labor force. So this is where the twin advantages for the companies that are giving the work on job work basis. So this is a mutual beneficial arrangement both for the MSME units and also for the big corporate units. Now, having seen the fruits of this job work, we have to understand what is job work. The job work from the perspective of GST. What is a job work from the perspective of GST? That is very, very crucial. Okay, so the job work in the common man's view will be different. But in the GST, there is a definition for job work. So this is a very, very crucial definition. This definition, just you look into that, we will be referring to this definition in many places. So there is a definition given in CGST Act, Section 2, Clause 68 defines job work. So what is a job work means? Any treatment or process undertaken by a person on the goods belonging to another registered person. Another registered. This is very, very crucial words. Belonging to another registered person. So this is very, very important. Why these words are significant, I shall come to that later. But this definition means treatment or process. So treatment and process, though they are similar, but there are a lot of differences there. The difference are there between the treatment and process. Okay. So goods should be belonging to another registered person. That only will qualify for the term job work. Then, and the expression job worker shall be construed accordingly. So the person who is undertaking a job work as per the definition will be considered as a job worker. There is no separate definition for job worker. The definition of job work includes the definition of job worker also. So this is very, very important definition that whether an activity amounts to job work or not has to undergo the test under this definition. Only when this satisfies this definition, we can say it is a job work. So the first question is, see, sometimes only some components are sent to the job worker, sometimes job worker. But the question arises, can a machinery or the capital asset, can the machinery itself be sent to a job worker? A particular critical machinery will be there. So the big companies or the person who is giving a job work, they can acquire the machinery on their own account and then they can give it to some smaller companies to do the job work for them. Okay. So the basic question, because sending the raw materials to another job worker is common. But now the question arises, can the machinery as such sent to the job worker? Yes, the answer is yes. Even the machineries can be sent to the job worker. it is not restricted to the raw materials only. The capital asset, it can be sent to a job worker. In GST terminology, it is called capital goods for job work. Capital goods for job work. Okay. So even the machineries can be sent to a job worker by a big company who buys the machinery on their own account, and then they are sending it to the job worker to do the job work operations for them. So what is the advantage? So the big company can say, see, I am providing the machinery. You have to run only my product and then machinery, so that there will not be any delay in production schedule or anything. So you give the timely delivery. So for that purpose, the machinery can be sent to the job worker. The machinery can be sent to the job worker. So in GST terminology, we say this is a capital goods. These machineries are called capital goods. So what is the meaning of capital goods? That is also definition. So first thing is, it should be capitalized in the books. So it should be capitalized in the books of the person who are giving the job work. This person is called principal. I shall come to that later. This person, in their books, this should be capitalized. Then only it should be used for furtherance of the business, in the course of furtherance of business. Yes, whenever it is sent to the job worker to do the machining operations or for them, so it is in the course of the business. There is no doubt about it. So it should be capitalized. When an asset is capitalized, that plant and machinery is capitalized, then it falls within the definition of capital goods. So capital goods can be sent to the job worker also. There is a section 143. See, this definition only deals with the job work procedures. What are the job work procedures that should be followed? So section 143 of the CGST Act deals with the job work procedures. This is an exemption provision. This provision has come into the statute, CGST statute, from the previous central excise regime. So this job work procedure has been adopted from the earlier central excise procedure. As you will be aware of the fact, in the central excise, the taxable event is the manufacture. So as soon as goods are manufactured, the liability to central excise arises. But the payment of tax is deferred till the removal of the goods from the factory. So the removal of the goods, as soon as the goods are manufactured, the liability for central excise arose in the central excise regime. But when that manufacturer has to pay the tax, the manufacturer has to pay the tax when the goods are removed from the factory. So in similar manner, there is a definition for removal of goods. So what is the removal? That is a definition: dispatch of the goods from the delivery by supplier to any person. So this is removal. So here we have to read through section 31 also. So the section 31 says, at the time of removal of the goods, the supplier should raise an invoice. So this situation arises. So whenever goods are removed, it may be capital goods, as I mentioned earlier, or inputs or raw materials are removed by the supplier to a job worker. Naturally, as per these two provisions, this is considered as a supply. So it will become a taxable event. To avoid the situation only, section 143 provides an exemption from tax. Exemption from the CGST or SGST at the time of removal of the goods. See, because section 31 says, whenever a registered person removes a supply for the purpose of supply, then they have to issue a tax invoice. If there is an obligation tax invoice arises, then there is a natural corollary, the tax has to be paid. Okay, so to get over the taxability only, the exemption has been provided in section 143. Exemption has been provided in section 143 because a combined reading of section 31 with the definition for removal makes whenever goods are removed for any purpose, then it becomes a taxable supply. But there should be some precautions for the job work. So in such a situation only, section 143 comes into play. So I used to say that section 143 is an exemption provision which doesn't tax the goods at the time of removal. So that is the crux of section 143. See, 143 says the principle. So the principle. So in the section 143 itself, they say who is a principal? The person sending the inputs or capital goods to a job worker is called principal. So this definition of principal applies only for the purpose of job work, but because there is another place also principal is defined, we shall not go into that. But here the principal means the person who is sending the inputs or capital goods is the job worker. Here this 143 gives a benefit to the principal. He can remove or send the inputs or capital goods to a job worker without payment of tax. Without payment of tax. So this is the gist of section 143. So it enables the principal or the person who is sending the inputs or capital goods without payment of tax. So this is a exemption provision, but this is with some conditions. This is with some condition. This is not a blanket exemption, but there are so many conditions. The courts have held whenever there is exemption provision, that should be construed in a strict manner, because government is losing the revenue on that account. So there should be strict interpretation whenever there is a exemption provision. So on that basis, this removal, which is exempt from tax, is subject to conditions, and then there should be an intimation. There should be an intimation. So this intimation is also from the yes. They are looking for online intimation. So you have to intimate the fact that you are sending the goods for job worker to the department to get a eligibility for exemption from the payment of tax at the time of removal. So the question comes, how to intimate? We say this should be intimated. So the question comes, how to intimate that? There is a prescribed document. There is a prescribed document for giving an intimation of job work to the department. This intimation has to be given in the form ITC 04. So this is very, very important, because nowadays government is not very much looking into these aspects. So when all the tax mobilization avenues are closed, government will come into this position. So that time government will come into this position. So that time they will say, if you are not filed ITC 04, then we will take it as a supply and then we will tax you. So that type of situations will come in the future. So to avoid that only, properly file the ITC 04 whenever the principal is giving the material on job work basis. So any person who is sending that, it is not an obligation of the job worker. See, job worker is the person who is doing the job work. The principal is the person who is sending the capital goods or inputs to the job worker. So there is an obligation on the principal to file this return or the statement. It is ITC 04. This is an intimation given, because section 143 provides for exemption on giving intimation and then subject to the condition. So now we have to see what is that intimation. So just you cannot go and give a letter, I am sending the goods to such and such company. That type of letter will not be sufficient. So it has to be in the proper form. That proper form is ITC 04. Is it a prior intimation? No, it is not a prior intimation. It is an intimation after the goods have been sent. After the goods have been sent. It is not like that. So before dispatching the goods, should I, before dispatching the input, should I give this ITC 04? No, it is not required. It is not required. This ITC 04, when it should be filed? It is a periodicity. It is a half-yearly return for someone, and then it is an annual return for others. So if that depends upon the turnover in the immediate preceding financial year. So whether you have to file in a yearly basis or half-yearly basis depends upon the turnover in the preceding financial year. So whether it is for the financial year, current financial 25-26, you have to file half-yearly or annual. You have to see the turnover for the previous financial year 24-25. If your turnover exceeds 5 crores, then it should be half-yearly. It has to be filed for 2 half years. If it is less than 5 crores, then it has to be yearly. It is yearly. So this return has to be filed in case of half-yearly. The first half year will be over by 30th September. You have to file it by 25th October. The second half year will be over by 31st March for 25th April. So annual return also, annual filers also, they have to file within 35th April. As such, this form does not attract any late fees. As such, as per the current provision, it does not attract the late fees. But in some of the audit cases, they are levying a penalty of 50,000 for not filing this return. For not filing this return, CGST 25, SGST 25, they levy the general penalty on this amount for not filing the ITC 04. So it is better to file the ITC 04 to avoid this penalty, and also to avoid the department saying that goods sent will be treated as a supply and then you pay the tax. So for this purpose, filing ITC 04 is a must for a person who is sending the goods for job work. See, what are the conditions? What are the conditions? The section says subject to the intimation and conditions specified or prescribed. So Rule 45 specifies some of the conditions. Rule 45 specifies some of the conditions for in case of the goods are sent to the job worker. The same conditions or the similar conditions are there in the section also. In the section 143, which deals with the job work procedure, has got own conditions. What are the conditions? In case of inputs, or I can say it is a raw materials. If these raw materials or inputs are sent to a job worker, it should come back to the principal within a period of 1 year, or it can be sold. So for simplicity's sake, I am saying it should be come back to the principal or the person who is sending the material for job work within 1 year. In case of the capital goods, the capital goods should be brought back to the place of business of the principal within a period of 3 years. So this is the important criteria. Now the question arises, can this period be extended? Can we extend this period? So this is very, very important. Can the period given 1 year for the inputs and then 3 years for the capital goods, can it be extended? Yes. For this purpose, you have to get the permission from the commissioner. So the commissioner also can give a 1 more year in case of inputs, that is raw materials. He can extend the time by 1 more year. For the capital goods, he can extend it by 2 years. But the CGST and SGST, there is a SGST Act is also there. In the SGST Act also, they use the word commissioner. Because in the CGST, we have got many commissioners. Admiralty Commissioner in Coimbatore, Madurai, and everywhere. So you can go and then approach him and then get the permission. There is no specific form has been given, though there is no prescribed form. Just you have to give a letter and then state the reason for not bringing back the inputs within 1 year or the capital goods within a period of 2 years. So he can, if he is satisfied, he will extend this period. He can extend this period. But in case of assessees who are under the state jurisdiction, commissioner is situated only at Chennai, Madras. As far as Tamil Nadu is concerned, the commissioner is situated at Chennai only. You cannot get this provision from the joint commissioner, who are the territory heads, because in Coimbatore, there is a joint commissioner will be there. He is the head for the entire operations of Coimbatore. So you cannot get the relief from the joint commissioner. There is only one commissioner. From him only, you have to get this extension. From him only, you can get this extension. So this is a very, very important aspect. He can extend. Now the question comes, I am not able to bring these items within this period. So if this is not coming within this period, then this will be considered as a supply. This will be considered as a supply. From which date it will be considered as a supply? Is it from the end of the first 1 year for the inputs, or end of the 3 years for the capital goods, or the such extended period, 1 more year for the inputs given by the commissioner, or 1 more year, 2 more years for the capital goods? No. If these things are not brought back within that 1 year or extended period, then it will be considered as a supply from the date in which the goods are sent to the job worker. So imagine if the capital goods are not brought back within 3 years, say first 3 years, then you have to pay interest at the rate of 18%. So if you are not bringing back within 3 years, then the liability, there will be interest liability on the value at the time of sending the goods, and then on the tax will be charged with the interest nearly for 3 years, it will become 54%. So this will be a huge. So ensure that goods as such inputs are brought back within 1 year, or capital goods were brought back within a period of 3 years. And also ensure that you have got the proper documents for bringing back the goods. There should be proper documents. So what are the documents that it should accompany whenever there is a movement of goods for the job work? We shall see. But ensure that we have got a proper evidence. Gate pass entry, stock entry in your books. All those things should be evidenced. That should be evidence that goods are returned within that period. So the giving the proof is on you, on the principal who is sending the goods, that they have been brought back within this year. Then there are some items which are sent to the job worker that need not be brought back. They can be disposed of that there itself. These are all the items: jigs and fixtures, molds and dies, and then tools. See, for example, sometimes to ensure that the output is proper quality, even the tools required for a CNC machine may be sent by the principal himself. And then they want a particular pattern for a component. So for that there should be a mold. Mold should be there. There should be the pakka, that measurement should be very accurate. For this purpose, the principal may send the molds also. So these molds, dies, jigs and fixtures, and then tools, whenever they are sent to the job worker, there is no condition that they should be returned to the principal. So that it can be need not be brought back in case these items. So another question that arises, with a bolt, then the job worker has to purchase bolt and then he has to attach it. In that situation, or also sometimes welding, all those things, they have to be attached. Some materials has to be added. Can this be done? Or he has to restrict himself to the material supplied by the principal. Here, there is a welcome clarification in circular number 38. It says the job worker can add his own material to the already given material given by the principal. So this is a welcome measure. So the job worker can add his materials. This is very, very welcome relief for the person who are sending the goods. So here, can the goods be sent from one job worker to another job worker? I have given a practical example. This is assumed, everything is assumed only. LMW Limited needs 2 job work operation on its inputs. So that only then it can be, you will be aware of the fact LMW Limited is a textile machinery manufacturing company in Coimbatore. It is a world renowned company. So it is giving for job work. So first the job work has to be done by ABC CNC center. Okay. Then after that, on the same product, because the machine of ABC CNC will be different from the machine owned by another second job worker, PQR. Okay. So this product has to be first done by the ABC CNC center, and then after that it should go to PQR. Now, is there any requirement after the work is done by ABC, it should come to LMW, then after that only LMW should give to PQR? No, it is not like that. They can directly send it. ABC CNC center, after completing it, the job work, they can directly send those materials to another machining center, PQR. So it need not be sent to only to the one job worker. There can be multiple job work on the same product by different job workers. So this is very, very important. But there should be proper documentary evidence. There should be proper documentary evidence. Now, another important aspect. Another aspect is, can the sale be, I'm using the word supply because supply is the word used in the CGST Act. Now the question arises, can the supply be effected from the job worker premises? Again, LMW Limited, okay, they are sending the parts for the machineries supplied by them. Already they have sold some of the goods. For that, now practically they don't do it. Assumption only. It is for the illustrative purpose only. Okay. So, can they send the goods or to the ultimate buyer from the job worker places? So, this is very, very important. Here we have to see whether the job worker to whom the goods are sent is a registered taxable person or not. If he is a registered taxable person, this LMW Limited, who is sending the goods to the job worker ABC, LMW can directly invoice for those goods from the ABC center if ABC is a registered taxable person. ABC is not a registered taxable person, directly can send the invoice. So the invoice, they have to say shipped from this address, they have to give the ABC CNC center, and then shipped it to say there is a mill, Nambodara mills. So they can send the mill. So directly from the job worker, it can go to the ultimate consumer. If the person is not registered, what should be done? LMW Limited should add the job worker premises as additional place of business. If they want to make the supply from that place. So this is very, very crucial difference. Only when the goods are going to be sent from the place of the job worker only, it should be registered as additional place if the job worker is not registered. But the job worker is not registered because he is within the threshold limit of 20 lakhs. And then LMW, after sending the goods, getting back to its premises, then in that situation, there is no need for registration as additional place of the business, even though he is a unregistered person. So there is no mandatory condition. You have to send it to the registered person only. You can send it to the unregistered person only, but only the bar is you cannot directly sell it from the unregistered premises without registering it as an additional place of business. So this is one of the aspects. So, as I mentioned, it is section 143 provides an exemption. It is an exemption provision. So, whenever the principal is sending the goods to a job worker, he can send the goods without payment of tax. Now the question arises, no, I don't want to do job work and all. I will send the goods as a supply to my job worker. So I will send the goods to him. Say the job work, the cost may be say 100 rupees per piece. The material cost will be 1000 rupees. So instead of giving the material free, I shall send the material at 1000 rupees with GST. Then whenever he is sending the bags, he will invoice it for 1100 plus GST. Is it okay? Yes, it can be done. So it can be done. So this is also provided in a circular or clarified in the circular number 38. So it is an option. So it is very, very clearly mentioned. It is important to note that provisions of section 143 are applicable to a registered person. Thus, it is only registered person who can send the goods for job work under the said provisions. It may also be noted that registered person is not obligated to follow the said provisions. It is not obligated. It is not compulsory that he has to send the goods without paying GST, or he can remove the goods without GST. It is his choice whether or not to avail the benefit of these provisions. So it is whenever he is sending the goods, it is not a must that he must send the goods without tax. He can send the material cost and then get back with the job work charges included in the material cost. So it is not a compulsory. So interstate job work and registration. See, one of the important condition is whenever a person is undertaking a interstate supply, he has to get registered. He has to get registered irrespective of the turnover. See, for the goods, there is a basic exemption limit of 40 lakhs. For the services, there is an exemption limit of 20 lakhs. But these limits will not be applicable to a person who is undertaking a interstate supply. Suppose from here, Coimbatore, we are going to send the goods to Palakkad in Kerala. Irrespective of the turnover, that supplier, that seller has to get registered. But there is an exemption for services. There is an exemption for services. This is the exemption given in IGST provision. There is a notification number 10/2017. It gives the exemption for the service provider. They don't say it is only for job worker. Generally, for service provider, he can undertake an interstate supply till 20 lakhs limit is registered without taking registration. So a person, MSME unit, his turnover year is only 10 lakhs. There is an order comes from Palakkad, then to do this operation for me or to carry out the job work, he need not get registered. He need not get registered because of this exemption notification. Now the question comes, who has to maintain the proper accounts? Who has to maintain the proper accounts? See, because the materials are moving, as I explained in the LMW, from ABC, then it goes to PQR. So all these movements, there should be proper accounts. So where the materials are there, there should be proper identification. All these records should be there. Is it the need of the job worker? No. It is the responsibility of the principal. So it is the responsibility of the principal to maintain proper inputs, proper records for the inputs and capital goods. It is his duty. But job worker, for his own records, he has to maintain. Because suppose he is going to get the job work from 5 companies, he must know what are the items that how many quantity received from A company, how much from B company. But the ultimate responsibility for the material sent out is with the principal. Why? Because principal is given an liberty or permission to send the goods without tax. So naturally, he has to maintain the accounts for the goods that are gone or that have been going out without the payment of tax. So this is the responsibility of the principal to ensure that he has got the proper records. See here again, the record should show what was the date of sending, what was the date returned. Then only the department can verify whether the goods have been brought back or the inputs have been brought back within a period of 1 year, or the capital goods have come within a period of 3 years, or the extended period by the commissioner. So the date of removal and then date of coming back should be there in the prior record. Then only we can satisfy the department. See the rate of tax. See, everybody is arguing for a single rate, or there are so many multiple rates are there. It is creating so much of confusions. So they want there should be a lesser rates. But in situation, we cannot have a single rate or anything like that. Still, there are so many rates are there. In job work also, there are 2 entries. This is a very, very important item. Job work is as I mentioned, Coimbatore is a hub of job work. Here, various industrial association like Codicia, SEMA, and everybody represented to the government that the job work tax should be reduced. Job work tax should be reduced. So, in pursuance to the request made by these type of association, the government reduced the job work rates. So, there is an entry 1D, services by way of job work, other than 1 year and everything. So one is printing and everything, that is leave out. So this is item for engineering job work, I can say. The rate is 6%. So other thing is manufacturing services on physical inputs. Manufacturing services on physical inputs. Now the question arises, what is the difference between the two? So earlier we were of the opinion, manufacturing service means if the product given or the input given undergoes a very drastic change. See, for example, rough casting is given, then rough casting is converted into a part of a motor. So entirely from rough casting, it goes to another component. So some manufacturing change in the entire change from the what it came in and what goes out. That is a manufacturing service. So it may attract 18%. So there was a clarification or there was a confusion in the industry as a whole. In that situation only, in this background, to clarify, we got a circular number 126. So 126. So earlier I mentioned about the definition of job work. Job work means any treatment or process done by a person on another registered person, goods of another registered person. So that is the definition in job work 268. So they bring in the 268. Whenever a job work is done to another registered person, it will attract 12%. When it is done to an unregistered person, it will attract 18%. So that is the clarification. So this is a very, very important thing that I thought I should bring it to the knowledge of this elite audience. Why? Because you have to be very, very careful whenever you are invoicing it to a unregistered person job work. So whenever the goods are sent for whenever a job work is done for unregistered person, that job worker should charge 18%, not 12%. Not 12%. So this is very, very important aspect. Another, see, textile. So this is since in Coimbatore, it is a hub for textiles also. Textiles, in particularly in Tirupur, there are so many job works are done on textiles, dyeing, printing, bleaching. So many activities are done. Okay, and similarly, there is a jewelry activities also done on job work basis. Jewelry activities also done by job work basis. So for textile job work, the rate of tax is 2.5% and 2.5, totally 5%. And for also jewelry job work also, the rate of tax is 5%. 5%. Now the question comes. What about back-to-back job work? Back-to-back job work. What is back-to-back job work? So for this, I've given an illustration. This is common practice in industry, jewelry industry. So that only I am giving it this. Kumaran Jewellers will give Mr. A 1 kg of gold to be converted into ornament on job work basis. Okay, they will say for 1 gram, I will give you a job work charges so much. Okay, say 400 rupees, they are saying 400 rupees. Then the A, what he will say, he will not do it by himself. He will take this 1 kg and then he will go to Mr. P. Then P will convert it into gold ornaments. A is just acting as an intermediary. So whether this will be coming under the job work, this is a important area, that is a dispute or a difference of opinion between the professionals and also department. So this is an item. Why this dispute comes? Why this difference of opinion comes? This is because of the definition. So 268, the job work, they say, means any treatment or process undertaken by a person. This is very, very important. Undertaken by a person. So department view is the process has to be undertaken by the person who is getting the inputs. So that is the department. So here A, who is getting the goods, should personally do the job, or his concern. Suppose the person to whom the job work is a partnership concern, that partnership concern itself do that job work. If this is an intermediary, then the department says this 5% will not be applicable, and then you have to pay tax on 18%, at 18%. So this is the department view. So back-to-back job work, so will be attracting a higher job work. So the same may be applicable for other job works also. But department is saying, when you are not doing by your own thing, you are not coming within the definition of job work. So this is very, very important idea. What is my view? In my view, who does the work is not relevant. Who does the work is not at all relevant. There should be some process should be done. So in the illustration I have given, Kumaran Jewellers gives to A. Suppose A may not be knowing anything about the jewelry at all. Suppose he has got some goldsmiths under him. They do the work, and then immediately he delivers the ornaments, and then he is getting a job work at the 5%. When he is using his workers, it is 5%. When he is giving it to other person, it becomes 18%. Is not logical. So as long as there is some process or treatment on the material given by the principal, it will be considered as a job work. Then the same rate of 5% only should get attracted even in a back-to-back job work also. This is my view, but there are different views even among the professionals and also with the department. So how to move the goods? First one is delivery challan. For sending the goods, there should be a delivery challan should be generated. Rule 55 deals with transportation of goods without any issue of invoice. So for the purpose of when a delivery challan should be used, so in there they say transportation of goods job work. It is one of the important item. So the consignor may issue a delivery challan. So this is very, very important. So delivery challan should be there whenever the goods are moved for job work. The contents of the job work, contents of the delivery challan. Note, these are all the contents of a delivery challan. This is very, very important. These content should find a place in the delivery challan given by the consignor or the principal, I will say. It should have the serially numbered, then date, number, name and address, then consignee, HSN, quantity and taxable value. All these things should find a place in a delivery challan. Why this is important? I shall deal with it. I shall explain the reason at the end of the later slides. But make sure you have got all these contents in the delivery challan. If the contents are not there, what will happen? Wait, I shall tell you what will happen with an example. Another question is, should the tax rate and then tax amount be mentioned in the delivery challan? So what are the contents of the delivery challan? Already I was shown. In that, with regard to tax rate and then tax amount, they say the tax amount and tax rate should be mentioned in the delivery challan where the transportation is for supply of the consignee. So when there is a supply only, the tax rate and then tax value should be mentioned in the delivery challan. For the job work, it is not a supply, so it should not be mentioned. So that is the view taken by the inspecting authorities or the roving squad authorities. So they pointed out, putting the tax rate and then tax amount in a delivery challan as a mistake, and then they are demanding the penalty of 200%. So what it is going to make a difference when you are going to put the tax amount in the tax rate? It is giving them better clarity, better amount the value, but still they say when it is not a supply, you should not put. So job work is not a supply. If you have put that value, then I am going to charge you 200%. There are cases where the 200% penalty has been paid. So it is better not to put the tax rate and the tax amount in the delivery challan sent for the purpose of job work. Now the question raises e-way bill and then job work. So e-way bill for the value above 50,000 or within above 1 lakh in Tamil Nadu, e-way bill is required for supply on reasons other than supply. So naturally, e-way bill is required whenever the value is more than, value of the consignment is more than 50,000 in interstate or 1 lakh within Tamil Nadu. So e-way bill is very, very required. What is the value? What is the value? So this is a very, very important aspect. Here, the value is the value of the material sent. Value of the material sent. Okay. So that should be given in the e-way bill. Because we have seen some of the cases, they give only the job work value. That should not be done. The value of the material should be given. So at the time of sending the goods, what is the value of the material? Whenever the goods are returned, the job work charges should be added to that value. I shall give it as an example. At the time of sending goods to the job work, the value of material is 5 lakhs. You have to mention it as 5 lakhs in the e-way bill by the principal. Here I mean the principal is the person who owns the material and sending it to the job worker. So he has to mention it as 1 lakh and then sending. So suppose the job work charges comes to 1 lakh. So the 5 lakh material becomes 6 lakhs. On the return, the value should be given as 6 lakhs. The value should be given as 6 lakhs. Sometimes the mistake happens at the time of returning. The job workers are very small units. They are not aware of the huge implications or anything. They just put the value as the job work charges of 1 lakh and then they send it. So the problem comes. You have to give the base material value plus the job work charges on the e-way bill. So this is a very, very important aspect that has to be seen. So who has to generate the e-way bill? So naturally, whenever the goods are sent to the job worker, the consignor or the principal should generate the e-way bill. Whenever the goods are returned after the job work, it can be generated by the job worker or the principal who sent the goods for job work. So either of them can generate the e-way bill. So suppose the principal is generating e-way bill, then he has to use the principal as the inward. There will be two options will be there, outward and then inward. He has to generate inward and then he has to then select the job work return option to get the returns from the job worker. So either of them can generate the e-way bill at the time of return of the goods. But for sending the goods, only the principal can generate the e-way bill. So this is already mentioned. Some of the cases, the roving squad is, they mentioned only the value of the goods as the service value. So they say this is wrong. So they are getting. And then another thing is also, whenever they are sending the goods back, whenever the job worker after finishing sending the goods back, he sends the goods only with the service invoice. He does not generate any delivery challan. Either the principal or the job worker generates any delivery challan. But for a job work, the delivery challan is very, very essential document. Delivery challan is essential. So even the goods are returned, there should be a delivery challan along with the job work charge invoices. So this is very, very important. So this is because only through a delivery challan, you can ascertain the value of the goods that are coming along with the bill, because the job work bill will indicate only the value of the job work. It will not indicate the value of the material. So you have to create a delivery challan also whenever the goods are sent back from the job worker place. This is very, very important. So input tax credit and job work. Input tax credit and then job work. Section 16. One of the condition is taking the ITC is that registered person should have received the goods or services. So one of the conditions for taking ITC is the person should have received the goods or services. So in that situation is only ITC can be taken. Now the question arises, can the inputs or capital goods be directly sent to the place of the job worker and then still ITC can be taken by the principal? So this is one of the important question. See here, I am giving an illustration. LGB Limited registered person in Coimbatore is buying goods from Gujarat. On this input, job has to be done by a unit at Bangalore. So from Gujarat on the way, Bangalore is there. So should the goods come to Coimbatore and then LGB send it back to Bangalore? No. It can directly ask the supplier from Gujarat to unload the goods at the Bangalore. So goods are not received by LGB. Can it take the ITC? Yes, they can take the ITC. They can take the ITC. This is what? Where from we get this authority to take this ITC? See, 16.2 says one of the condition is you should have received the goods or services to claim the ITC. But now against that provision, I am saying even though goods are not received, the principal here LGB Limited can take the ITC. What is the statutory backing? It is section 19. So this is section 19. The section 19, the marginal note or the top capital is taking input tax credit in respect of inputs and capital goods. So that is the section that enables taking ITC in respect of the goods directly sent to the job worker. So in that example, it need not come to Coimbatore to get eligibility for ITC. Even the goods sent directly will be eligible for ITC. It's the same thing applies for capital goods also. Here, this is one of the important aspect that I thought I shall bring it to the knowledge of this elite audience. This circular says when the goods are directly sent to the job worker, again the principal shall generate a challan, that is the delivery challan under CGST rule, and then send the same to the job worker directly. So even though in this example, I have given, the goods are unloaded at Bengaluru, this LGB Limited has to generate a challan for the material sent directly to the job worker and send it to the job worker according to this circular number 38. So caution should be exercised whenever the goods are directly sent to the inputs or capital goods are directly sent to the job worker. There is a responsibility on the principal, that is the person who's sending the goods, to generate a challan, and then send it to the job worker. So this is an aspect. So these are all small aspects, but in future this may be creating a problem. It may create a problem. Yes, I told what are the contents of a delivery challan. Contents of a delivery challan. I told you carefully go through these contents. Why these contents are important? This is because of this Allahabad High Court in the case of Famous India. Okay. See, here also there was a vehicle interception. So vehicle was intercepted by the sales tax authorities, and then they levied penalty. So they levied the penalty. So against this levy of penalty, this assessee or this registered taxable person goes to the court and then say, see, this is for the job work. So I have sent this goods for job work. So in this situation, the penalty cannot be levied. Why? Because job work I am sending without any tax. When there is no tax, there cannot be any penalty. But court said the delivery challan that you produced or the delivery challan that accompanied the goods does not have the details as per Rule 55. So that is what I mentioned. What are the contents of a delivery challan? You should have the name of the consignor, then consignee, place, date, everything should be there. So without these contents, the court held there is a violation. So it confirmed the levy of the penalty. So this brings up to the important conclusion that the delivery challan sent along with the materials or the delivery challan generated for sending the goods inputs directly to the job worker should have the contents as specified in Rule 55. So Rule 55. This is very, very important. When it doesn't confirm, there is a good chance for levy of penalty when there is a vehicle interception. So these are some of the aspects. Because job work is a very, very wide subject, I thought some of the essential within this short span of 1 hour. Why? Because in the future, the department may turn to this area. They may say if the material has not been brought back within the period of 1 year, and also there is no proper delivery challan. All those things will be taken by the department in future, or ITC 04 not filed. These are all the areas department will point it out as our mistake, and then they will try to levy the tax on this. Thank you. Thanks for the wonderful audience. Thanks for your participation. And then it was a pleasure to interacting with you. I want to interact, and then you can raise the queries. And also, if anyone wants to be heard orally, instead of I cannot write it down or putting it clearly, you raise your hand. That person's mic will be unmuted, and then you can raise the query using your mic. Thank you. Let's go into the question and answer sessions. Yeah. See, one of the query is, should we have to reverse ITC if there are some damages in the place of job worker? Yes. Yes. If there are damages in the place of job worker, naturally you have to reverse, because already section 17(5), if the goods are lost or destroyed, then you have to reverse that ITC. On that similar line, if there is a damages in the place of job worker, then it has to be reversed. If it is normal, then it need not be reversed. If it is not, it need not be reversed. We are sending seeds nil rated for cleaning to job worker. In this, what is the GST rate? Sir, usually for agriculture related activities, it will be related for making it. But this is a seed, it cannot be considered as a item. I shall check and then get back to you, Nataraj sir. You send a mail to our thing, giving some details, then we will be able to revert back to you, sir. Maintenance of records by job worker is mandatory if they are registered. See, that is what. See, the maintenance of records or any documents is on the principal, not on the job worker. It is not on the job worker. So it is not the duty. It is not the duty of the job worker to maintain the proper records, but it is better for him to maintain the records. What are the items that he got it from the registered person? What are items that he got it from unregistered person? So for this purpose, it is better to have some records, because items that are coming from an unregistered person will be having a higher rate of tax as compared to the one that is coming from the registered person. But the principal or the primary onerous is on the principal to maintain all the records. Principal supplier have to register job worker address in GST as additional place, whether intrastate. See, already I have explained during that. See, principal supplier. See, the question of registration of additional place will come only if the supply is going to be affected from them and the job worker is unregistered person. So with these two conditions, the job worker is unregistered person, supply is going to be affected from the place of such unregistered person. In that situation only, that has to be registered as additional place of business. If after the job work, the goods are going to be returned back to the principal, in that situation, there is no need for registering the job worker place as additional place of business. If he is already registered person, there is no need for additional place of business. Do we need to reverse ITC on goods sent for demo? See, ITC for demo, if you are going to return it back, then there is no need for reversing the ITCs. Inward details. Inward details of having received the goods for manufacturing, as in one of the case, inward details not produced by job worker. Client is not cooperating for filing ITCs for. What are the consequences? How to avoid it? See, that's what as of now, penalty of 50,000 will come for each year. When penalty, when he is not cooperating, then why should you bother? Okay, then you give him the consequences and then file it. And also, sometimes the department will say, see, because section 143 gives an exemption for sending the goods out only on the basis of the intimation. So when this intimation is not produced, the department will say every outer movement is a supply, then I will be charging you the tax. Sir, job work e-way bill is essential to be mentioned in both DC and service tax invoice. See, e-way bill details need not be mentioned. See, e-way bill details need not be mentioned in the DC or service, but both should be syncing. Both should sync, so it need not be mentioned. Sir, I need to know the documents, what are all the sending along with the demo equipment while sending it to customer, and then it is not for sale. Kindly clarify. See, first you get the PO copy. PO copy, the person who is going to buy would have given that. See, first I will be seeing the demo. After that only I shall be delivering. So you can take the send the goods along with the delivery challan. Because delivery challan, now other than supply, you have to take a delivery challan with the content. In e-way bill, there is an option outward for demo purpose or supplier not known. All those conditions will be there, and then there will be any other case. So in any of the thing you can put, and then you can take the goods. We have sent our yarn to convert into 220s. See, here also there could be a possibility. Department will say there is no process is carried out, because converting into tools, there is no process is carried out. So they may say it will not be attracting that 5%, but any job work related to textiles is 5%. So that will come. That can be given as an explanation. Can you please explain about the interstate registration? So interstate registration, if the value of the job work calculated on the all India basis exceeds more than 20 lakhs, you have to get registered. Otherwise, you need not be registered. Balaji, while giving ITC, I shall check and then tell. No, job work has offered 15 per 18 per GST. Again, it need not be charged. Again, it need not be charged. Material service or repair purpose. Can we send that job work? No. So the repair service will not be coming under the job work. Repair service will not be coming under the job work. For yarn doubling, do we need e-way bill? Is there a e-way bill for job work relating to textile within Tamil Nadu? There is no need for a e-way bill. So it can be, it need not be, but it is better to generate to satisfy the authorities on the way. After job work, so in this example, which HSN we should put? See, after the job work, if the character of the item undergoes a change, then you have to give the what is that item that has gone into change. For example, rough casting is given, and then after the job work, it becomes a component of the car part. Then that HSN should be given. See, many times the roving squad is insisting value to be mentioned in DC. since the value of the goods is already mentioned in the e-way bill, it can also be mentioned in the DEC. See, here only the department plays a double-edged game. Okay. Whenever if you put it, because as per the only if it is for supply, you have to put that value. Otherwise, it is not required. So when you put it, they say, why you are putting it? So I will be charging you GST. So that is a violation. Even if you put it, if you don't put it also, they say it is a violation. But strictly, if you are going by the words of that provision, when it is not for supply, you need not put the rate. You need not put the value and then tax. These are all some of the queries received. Thank you. Thank you. Your participation only keeps us motivating. Thanks for all of your participation. Thank you, one and all.